welcome everyone. Thanks for joining us today for this webinar. What the heck is the Corporate Transparency Act, and does it apply to me? I think you might find that the answer is yes. And hopefully that's why you're joining us here today. I'm Meredith Badler. I'm the Deputy Director at the Colorado Business Committee for the Arts, the CBCA. That also gives me the pleasure of running our Colorado Attorneys for the Arts program, which is what this presentation is in conjunction with. A few housekeeping items before our wonderful speaker joins and gives our content here. We are recording today's webinar, so if you are watching this later on YouTube or through CBCA's resource library, hello to you. We know there are a lot of folks who are interested in this information, and it certainly applies to many small businesses and creative entrepreneurs. So we are happy to be able to record today's webinar for folks to enjoy later. We are in the Zoom webinar mode. So all of our wonderful attendees, and there are many of you today, you are hidden, your camera's off, you are muted, but you do have access to the chat as well as the, oh, good to know, my audio is weird. I'll see what I can do about that. You'll only hear from me a little bit more. There's also a Q&A feature, so you can use that to share your questions for our speaker as well. For those that don't know, Colorado Attorneys for the Arts is a legal referral service offered here in Colorado to help connect artists and creative entrepreneurs with their legal matters. Most of those referrals are for pro bono or free legal assistance. So I encourage you to reach out, learn more about how Colorado Attorneys for the Arts, or CAFTA as we call it, can support you. We also offer consultation clinics. These are virtual Zoom conversations with one of our wonderful CAFTA attorneys. The next one is coming up at the end of March, and you can request an appointment for that by Monday, March 4th to get into our first quarter consultation clinic. With that, I'm going to turn it over to our speaker. Dave, are you there? There you are. Dave Ratner is with the Creative Law Network and is a longtime CAFTA volunteer, advisory committee member, speaker, and is here to share with you more about this pesky Corporate Transparency Act, what it is, how it applies to you, and again, answer your questions. So Dave, take it away.
Thanks, Meredith, appreciate it. And thank you all for being here. This is a really important topic for a lot of people, and a lot of people aren't aware of it. So kudos to you all who are here taking the time to learn a little bit. And I will just be going over some basics of this new law. As Meredith said, please put any questions you have in the Q&A or in the chat. She will monitor that. I will try and keep an eye on it. And I may skip a question that I see if I know that I'm getting to that answer on a later slide. So we'll try and cover everything today. This actually probably won't take the full hour, because even though this is really important, it is not super complicated, and we don't want it to be intimidating at all. It's just really having this information so you can take the necessary action to comply with this law. So briefly, a little bit about me. As Meredith said, my name is Dave Ratner. I run a law firm called Creative Law Network. We specialize in working with creative people and businesses on all sorts of legal issues, helping protect our clients and make sure they are in compliance with the law, as well as helping them get their deals done, protect their intellectual property, things of that nature. So a lot of what we do for folks is help them run a business, right? And so to run a business, we usually have to start a business. We may start an LLC, we may start a corporation, and that is all related to this new law that touches on or requires some limited action by all these companies, LLCs, corporations that are operating in the US. And so we will obviously just go over what the act is, what it requires, how it applies, things of that nature. And then we'll be able to hopefully set your mind at ease, because the main question, as implied by the title of this presentation, is, does it apply to me? And the Corporate Transparency Act does apply to most businesses in the US or operating in the US. And if you are, for example, a single owner it's easy to use an LLC. That's the most common companies we generally see for entrepreneurs and small businesses. Creative businesses are generally forming LLCs. And even if you are a single owner LLC, or what we call a single member LLC, you are still a company. You are still an entity. An LLC is a limited liability company, therefore is a company, and it is considered a separate entity under the law. A separate company is kind of a separate person under the law, right? It can sign contracts, it can have a bank account, things of that nature. So that's what this law is meant to apply for. Yes, this presentation will be available afterwards. And we will have it posted both through CBCA's website and its resources, through YouTube. So this will be available afterwards in case you want to go and play it backwards or pass it on to someone else who may not have been able to be here today. A sole proprietor, by the way, depends on what that term means. Okay, so if I'm an individual and I go start a new business and I don't go form an entity with the state, I just say, my business is now called Dave Ratner's Business, or Dave Ratner Law, or whatever it is. That could be a sole proprietor in the sense that I haven't formed a separate entity. I'm just doing business under my name. However, what's confusing about the term sole proprietor is that a company, if I, Dave Ratner, go form a single member LLC, I now have Dave Ratner Law LLC. That is a separate company. When I go to file taxes, the IRS treats me as a sole proprietor. So depending on how we're using that term, you may or may not be, you are a sole proprietor, you may have a company or may not, you can still call yourself a sole proprietor. This Corporate Transparency Act applies to an LLC. So if I have a single member LLC, this law applies, and I'll explain that as we proceed. So very basically, we'll talk about what is the Corporate Transparency Act. Okay, this is a law that was passed in 2021, but it didn't go into effect until January 1st of this year. So there's time to prepare. And the Corporate Transparency Act, as it implies, is about transparency for corporations and other entities. The reason for this law is so that the federal government can basically prevent money laundering. The federal government wants to know who is behind each company that is formed or doing business in the US. They say it intended to make it harder for bad actors to hide or benefit from ill-gotten gains. So they want to know who's behind this company. If someone goes and forms a shell company just to pass money through it, they want to know who's the individual, the human being behind the company. So in order to get that information and hopefully prevent bad actors, the law requires every company to report who the owners are. And that's really the very basis of what we're going to talk about today. That's the whole, that's the main thing here, is just every company in the US, with some exceptions, is going to have to do these reports. So what is required? What's required is companies report information about their beneficial owners. Okay, and we'll talk about what a beneficial owner is. Basically, beneficial owner is someone who owns or controls a company. So if I am the sole owner of my LLC, I'm the beneficial owner of that LLC. And that beneficial owner information, my information as the owner of my LLC, must be reported to the Financial Crimes Enforcement Network. Sounds kind of scary. We call it FinCEN. FinCEN, the Financial Crimes Enforcement Network, is a department of the US Treasury. So it is part of the federal government, and as implied, is meant to address financial crimes through the Treasury. So this report, this is again just a report that every entity is going to have to make to FinCEN. The Treasury will have that information. Who must report? Well, companies that are all these companies, the companies that are subject to the Corporate Transparency Act are called reporting companies. And reporting companies have to report this information about their beneficial owners to FinCEN. Reporting companies include LLCs and corporations that are formed in the US or in a Native American tribe, or that are formed elsewhere, but are doing business in the US or with a Native American tribe, and basically are registered to do business. So there may be a foreign company that is registered to do business in the US. I doubt we have too many of those folks on this webinar, but I still will mention it. Most of the folks here I know have probably formed a company, whether it's in Colorado or in another state, and therefore this law would apply to most of those companies. Obviously, the question is, well, what do I have to report? What must be reported? So the beneficial owner information report is what we're going to fill out, okay? And the beneficial owner information report asks for information about the company or the entity and its beneficial owners, and in certain cases, what we call the company applicant, which I'll explain a little bit. So what is the beneficial owner? The person who has to be on this report, or the person whose information must be in this report. A beneficial owner is any individual who directly or indirectly either exercises substantial control over a company, a reporting company, a company required to report under the Corporate Transparency Act, or owns at least 25% of interest in a reporting company. So there's places where you're not going to be a beneficial owner. If you own stock in a corporation, let's say, whether it's a public corporation or a private corporation, and you own 1% of the stock, you are not a beneficial owner. If you work for a company, but you don't exercise substantial control over that company, someone else, you don't own it, you just work there, you're not a beneficial owner. But anyone who either exercises substantial control or owns at least 25% of the company is considered a beneficial owner. So what is substantial control, right? Because I think one of the things that we come up with here is maybe a company has a manager or a CEO or something like that. What does it mean to exercise substantial control? You may own one LLC but work for another one. Maybe you own at least 25% of one but exercise substantial control over another. You might be on two beneficial owner reports. So what is substantial control? This is a common question because it's like, well, who is it? Each person that's involved in a company, do we have to report all of them? Substantial control is someone who meets any of these four, not all four, but any of these four criteria. So if someone is a senior officer of the company, they are considered to have substantial control. They must be listed as a beneficial owner. If someone has authority to appoint or remove officers or a majority of the directors of the company, they are someone who has substantial control. They are considered a beneficial owner and must be on the report. If someone is an important decision maker, they are also considered to have substantial control. They must be listed as a beneficial owner on the report. Or if the individual has any other form of substantial control, they would also be considered a beneficial owner. I should also mention, by the way, there are resources that list this sort of information on the web, and I'll provide those links at the end of this presentation on our last slide. So if any of this, you want to dig deeper into this, there is a good amount of information out there that FinCEN has published. And so we're not trying to hide the ball here. The information is public, and you can always dig a little bit deeper if it is something that you want to look into a little bit more. So talking about these are the people that have to be listed on this beneficial owner information report. And the information, like I said, is going to be submitted to FinCEN. So I'm sure one of your next questions is going to be, how do I submit this report? Well, we submit the report online, try and make life easy, or they think they're making life easy. So we submit this report through fincen.gov/BOI, beneficial owner information. And these BOIRs, these information reports, can be completed in two ways. Either on the web using a web-based form. So basically, you're entering information onto the web, you're going to click submit, and you're going to be able to enter it in that way. The other option is to download a PDF, and then you will be able to complete that PDF and upload it back to FinCEN digitally that way. All the BOIRs, all the beneficial owner information reports, are submitted digitally. So we cannot fax them, cannot mail them in, cannot hand deliver them in case you want to take a trip to the Department of Treasury. They will not accept it, cannot be mailed in. It has to be submitted through the website. The person who submits the BOIR also must provide their name and email address. So my law firm, we are submitting a lot of these beneficial owner information reports for our clients. So I am listed, I'm saying I am the person submitting this report. They want to track all this stuff. They want to know everybody involved, because remember, this is financial crimes enforcement. They're trying to prevent money laundering. They want to know everyone who's behind it. So they are going to ask for that information as well. When you submit online, you will get a confirmation of your submission, so that you get a PDF if you've submitted through the web base. So you'll be able to keep track of when you did it, what information you provided. So you'll be able to save that file to know what they have, what information you gave them, what information is on file with the US Treasury under this Corporate Transparency Act. So that's the basics of how we're going to submit the report. Talked a little bit about what goes on that report, and the thing that is really important here is there is a timeline when we have to submit the report. So beneficial owner information reports the timeline depends on when the company was formed. So for most of you here, you probably have a company already. You're thinking, okay, I'm telling you, you have to submit this thing, right? You have until the end of the year. If your company was formed before January 1st of 2024, you have this entire year to submit your report. Now, we are encouraging all our clients to submit sooner rather than later, so we don't forget or leave it till the holidays in December, but you do have until December 31st for a company that was in existence when the law came into effect on January 1st of 2024. Now, this is going to apply for all old companies and all new companies. So companies formed during 2024, between January 1st and December 31st, have 90 days after formation. So basically, if you're starting a new company this year, you form by filing usually articles of organization for an LLC or articles of incorporation for a corporation. You file that form with the state. Within 90 days after filing that form with the state or Native American tribe, you need to file your BOIR, your beneficial owner information report, for your new company. Starting on January 1st, 2025, the Department of Treasury feels like old hat by now, everybody knows the deal. You'll have 30 days after forming a new company to submit this BOIR. So it's really, this is not going away. This is something we're going to have from now on, so the federal government knows every company operating in the US, who the people are behind that company. So whenever we form new companies in the future, this is just part of our routine. We send in the BOIR so that the Department of Treasury, FinCEN, part of the Department of Treasury, will know the people behind each new company. Very importantly, there is no fee for filing your BOIR. There's no filing fee. So a lot of times when we do file for our companies, let's say you're filing an annual report, or what we call a periodic report, there is a filing fee. In Colorado, it's $10 a year. In other states, it's different. For the BOIR, there is no filing fee that goes to the Department of Treasury. They're not making money off of this. It is simply a preventative measure. So once it's done, there aren't extra costs that go along with it in that respect. Some companies are exempt. A lot of you are thinking, hey, I don't have to do this, right? Because this is just my little company. I barely do any business with it. It's been sitting. Maybe your company's been sitting dormant. You don't have to do it. That is not a reason for being exempt, but there are certain companies that are exempt from this reporting requirement. I will warn you that most of these exemptions do not apply to most of the folks on this call. It really is, I will show you the exemptions briefly so you can get a feel for it. But most single member LLCs, most corporations are not going to be automatically exempt. And as I said earlier, the thing that would exempt you is if you hadn't actually formed a company, if you were just using a company name, we call it like doing business as a sole proprietor name. That name doesn't make it a company. Once you file with a state or tribal entity that says, I'm forming a company, you are then subject to the Corporate Transparency Act. So I will show the exemptions here. Hopefully your screen is big enough to see them. There are 23 different exemptions. I will not go through every single one of these because I doubt that most creative businesses fall into one of them. Most of you working in the creative industries or just being small business owners are not in the securities industry. You are not a bank or a credit union. You are not a broker dealer. You are not an insurance company. You are not an accounting firm or a public utility. So when you look through here, as you kind of skim through these 23 different exemptions, my guess is it probably doesn't apply. Again, there is significant detail about these online, and I will have the links if you want to go dig a little bit deeper into whether you might qualify. That information is available. So not trying to prevent you from knowing, am I exempt? Does this apply to me? If you have an LLC and you are not one of these 23 different companies, then it does apply to you. And it is a good point I just saw in the chat. If you are a nonprofit organization, a tax exempt entity, if you are a nonprofit organization, a tax exempt entity, this does not apply. So it doesn't apply to a lot of 501Cs out there. 501Cs are not generally going to have to file a form under the BOIR under the Corporate Transparency Act. The question I see here, it doesn't apply to a sole proprietor if you're not an LLC. Yes, if you have not formed a company, if you have not filed to form an LLC, if you have not filed to form a corporation, you're not an entity, you're not a company, and therefore the Corporate Transparency Act generally should not apply. The Corporate Transparency Act applies to companies, to entities that have been formed with a state or a Native American tribe. Forming a company requires filing a document with the state or a Native American tribe. That creates an entity, and that makes you subject to the Corporate Transparency Act. So hopefully that distinction is clear. I know it can be confusing. So let's talk about what we do have to report, okay? Because we're going to report information about the company. We're also going to report information about the individual. So we'll talk first about what we have to include on that report about the company. It's going to be basic information for both of these things, for both the company and the individuals. It's basic information. For the company, you have to provide the legal name of the company, any trade name or doing business as. So if I had Dave Ratner Law doing business as Creative Law Network, that would be on the report as well. We have to provide a complete US address, the jurisdiction of formation. So as I was saying, to form a company, we file a document with a state or a tribal entity. They want to know, or the report requires telling them what state or tribal entity you formed your company with. And then your IRS taxpayer identification number. For most companies, that TIN is what's called an employer identification number. We call it an EIN. You have an employer identification number, whether or not you have employees, that's just the word the words they use. But basically, this is a number that you have from the IRS that you use to report for your company on your tax return or with the 1099, things of that nature. So this is information, nothing particularly scary or things you should really have to dig for very much, just basic information about the company, name, address, where you formed it, and your tax identification number. So those are the basics that you're going to include on your report from the company side. Now, we also have to report, as I said earlier, each beneficial owner. Right? So the beneficial owner, as a reminder, is someone who exercises substantial control over the company or owns at least 25% of the company. So every individual who is a beneficial owner must be listed on this report. And again, it's going to be basic information about each beneficial owner. That person's legal name, their date of birth, their current address, and then basically an ID number, whether it's a driver's license or a passport. Basically, they want a number that is the identification number from identification that was issued by a state or local government or a Native American tribe. For most of us, that's going to be our driver's license or our passport. So for me, I listed, when I did my beneficial owner information report for my law firm, I listed myself as a beneficial owner. I put in my legal name, my date of birth, my address, and my driver's license number. Also have to give them an image of that license or passport. So taking a photo or doing a scan, that gets uploaded along with the beneficial owner information report. So they can verify, hey, this is Dave's driver's license number, and here is his driver's license verifying that that's actually my driver's license number. So feels a little invasive perhaps, but information the government has anyway. There are really a lot of things about the Corporate Transparency Act are kind of connecting the federal government with what the state government has, right? My driver's license was issued by Colorado. Now the US Department of Treasury will have my driver's license number and be able to attach me to Creative Law Network as a beneficial owner of that company. So I do have to provide this information. And as I will mention in a little bit, it is not publicly available. So just because I'm giving FinCEN my date of birth and driver's license number, the general public can't go look that up. It's not going to be a publicly available database because obviously we want to make sure we're protecting our information as best as possible these days. So that is the information each beneficial owner has to provide. There is one other thing that that will go on the application for, on the beneficial owner information report on the CTA filing. One other thing that applies to some, but not all companies. So some companies have to include what is called a company applicant. A company applicant is only required for a company that has been formed after January 1st, 2024, or on or after January 1st, 2024. If your company was filed before January 1st, 2024, you do not have to include your company applicant. If it is a new company filed January 21st or beyond, we will have to include that company applicant. But the company applicant is not anything super scary, unusual, or hard to discover. The company applicant is the individual who filed to create the entity. So if I go start a new company today, I'm going to go, let's say I'll start in Colorado. I'm going to go to the Colorado Secretary of State's website. I'm going to file my articles of organization to form an LLC, and I am now the company applicant. And so when I go to file my BOIR, I will include myself as the company applicant. The other thing that can go along with this is if another person directed or controlled that filing, then that person must be listed as the company applicant as well. So if I am an attorney, well, not if I am an attorney, I am an attorney. If a client directs me to go and file to form a company, then I am the company applicant. I filed for my client. My client directed me to file. They're also listed as a company applicant. So again, the Corporate Transparency Act, just trying to make sure that the US Department of Treasury knows who's behind the company. The company applicant is just another kind of touch point for them to figure out who is behind each company that is doing business in the US, each company now that is being formed in the US after January 1st of this year. So company applicant may or may not apply for those of you on this call, but in the future, as you grow businesses, as you start new businesses, when you start your next business, you will have to report your company applicant when you file for the beneficial owner information report. So it would be great to say, I filed my form, I'm done, I never have to think about this again. Maybe. What's going to happen is, if any of the information that you put on your report changes, yes, you have to file those changes. So chances are your name and date of birth probably won't change, but if your address changes, you will need to report that to FinCEN. You'll need to file a new beneficial owner information report. So whether the information changes about the company or the individuals, anything that is on that report, so anything I've discussed thus far, the beneficial owner information, the company applicant, if any of that information changes, we have to update FinCEN with a new report, a new BOIR, a new beneficial owner information report. So we want to keep this in the back of our head. We're planning to move, we're planning to change office spaces, we're planning to move to a new house. That will get reported to FinCEN as well. You have up to 30 days after that change to submit this filing, but it does have to be submitted. We have to keep FinCEN and the US Department of Treasury updated on who is behind these companies and the changes to that information about the people or the companies, not to the company applicants. That change doesn't have to be reported, but any information about you as a beneficial owner or any change to your information as a beneficial owner or any change to the information about the company does have to be reported. And basically what happens is you create a new BOIR. You don't have to find the old one and make a change and only change this, but not change that. You just fill out a new one. And again, there's no filing fee, so it doesn't cost another however much to do the filing. It may be kind of a pain, but whenever we move, I moved recently, I had to change my address with all my credit card companies and bank and all this stuff. And so when you move, this is just one more thing to add to your list of people to update or entities, places to update about your new address. We now need to keep FinCEN updated on our new address as well. So keep it in mind, back of your head, because that's not going to go away if you move or your address changes or just information on your BOIR changes. We have to report that change within 30 days. As I mentioned a few minutes ago, the BOIR information is not available to the public. You don't have to worry about someone going and looking up and finding your address or your driver's license number or something like that. FinCEN will permit government officials to obtain the beneficial ownership information for authorized activities like security, intelligence, and law enforcement. That's kind of the purpose of the Corporate Transparency Act, right? So they can enhance their enforcement and prevent bad actors. And that's how this works. That's the purpose. And so while FinCEN will allow the government officials to obtain this information, they're not going to publish it. They also will allow financial institutions access if you give consent or if the reporting company gives consent. So if, for example, your bank said, I want to see your BOIR, they would need your consent before they would get that information. So there is still protection for us. It is not public information. I'm sure at this point, a lot of you are thinking, this is a pain. I don't want to deal. What happens if I don't file? There are penalties here, up to $500 per day that you don't file. The penalties are for willfully violating the requirements. So willfully means knowing that you have this obligation and choosing not to file, or willfully filing false information, or willfully failing to update or correct the information. So if you know about this and you fail to do it, you are subject to fines. Sorry, you're here today. Now you know about it. Now you have to do it. I apologize, but the word is out, and willfulness is not something I'm worried about for you. If you just go ahead, use your good faith efforts to actually submit your filing. So there are civil fines of up to $500 a day. There actually are also criminal penalties of up to $10,000 and 2 years in prison. Now keep in mind, this is for criminal willful. This is not, oops, I forgot, or rather, I didn't know about this. If you didn't know about it, you're not going to jail. But the point is, if you know about it, submit your filings. You're not subject to fines. Not going to get in trouble for this because $500 a day will add up pretty quickly. So, but the idea is not to be scared, right? The purpose of this is to scare the bad guys, right? To prevent people, prevent bad actors. prevent money laundering. It is not, they're not coming after you. Don't expect the agents on your doorstep 30 days from now if you just submit a new filing. But it really is, again, there's a good purpose behind this. It shouldn't be super complicated, so it's nothing to be afraid of. They have made it very approachable. It is all online. You don't need any special qualifications to go and submit this filing, but you do have to do it. It is generally easy. Like I said, there's no filing fee. It is kept confidential. They give you proof of your filing, but you do have to do it. You don't have to do it every year. You only have to update any changes to that information. So it shouldn't be super intimidating, but it is now just a new requirement. It is a new basic of doing business in the US is to comply with the Corporate Transparency Act and submit these beneficial owner information reports. So as I mentioned earlier, there is a lot of information online. The basic website is at fincen.gov/BOI. And you will find the links to submit a filing there or download the PDF there. I also recommend the FAQs, the frequently asked questions. The FAQs are well organized. They do go into a fair amount of detail. And so I think a lot of the questions you may have, if I, for some reason, don't answer it, or you wake up in the middle of the night with a new question that you didn't think of today, or someone else asks you a question about this, I think the FAQs are pretty helpful. I also recommend they have some downloadable PDFs, these publications. They have a filing instructions. They also have the small entity compliance guide that has flow charts to say, ask a question. If you are this, yes, you have to do this. No, you do not. So it is, again, they've made it approachable. You don't have to be a lawyer to file this, but as a lawyer, we are doing these filings for our clients. Certainly, if you feel like I don't want to deal with this and you want to engage our law firm to do the filing for you, we're happy to help. So you can also reach out. That is our law firm, creativelawnetwork.com. Or if you have questions you can't find an answer to and it's keeping you up at night, or you just can't find an answer, you can always reach out to me. I'm certainly happy to help and make sure this is as easy as possible. I do see there are some questions that I haven't gotten to, so let me look at these real quick. Eric, thank you for waiting on your question. I'm a sole proprietor, not an LLC. However, my trade name is registered with the state. Am I still exposed to this new act prior to elevating to an LLC? A trade name does not make you an entity. A trade name is filing you're doing business as, is filing the business name you're using to conduct business as an individual. So just filing a trade name does not subject you to the Corporate Transparency Act. When you do file your LLC, you will then have to file the beneficial owner information report, like I said, within 90 days if you file this year, or if it's after January 1st, 2025, within 30 days after creating that LLC. I see a question from Rita. I'm a sole proprietor. Company is in the state business database, income tax filed on personal income tax. Okay, where do I stand with this law? So Rita, when you say you're a sole proprietor, company is in the state business database, I would need to know more about what qualifies it. If you have filed to create a company, to create an LLC, to create a corporation, or there's various other types of entity formats, if you have created an entity with a state or tribe or Native American tribe, then you are subject to this law. If you are just using a business name but have not filed to create a separate entity, then the Corporate Transparency Act would not generally apply. And then Robert had a question in the webinar chat. I formed an LLC for my original band primarily to safeguard our name and from being claimed by others. Okay. We occasionally receive cash from our gigs, although it's not substantial. I'm the sole member listed on the LLC. How should I go about reporting this? Well, Robert, I can't give you legal advice, and I should actually clarify that nothing I've said today is personal legal advice. Legal advice can only be given to you by your attorney, and I have not been engaged directly to free your attorney through this presentation. But I think the question is, if you have an LLC, therefore your LLC is subject to the Corporate Transparency Act and would require a beneficial owner information report. Whether you are the only beneficial owner or whether other members of the band are also beneficial owners goes back to that slide I showed about substantial control. Whether a beneficial owner is someone who exercises substantial control over the business. So if other band members qualify as beneficial owners, if other members of the band exercise substantial control over the business, they would also be listed on the BOIR as beneficial owners. So the beneficial owner is a term we use for anyone who owns 25% or more, but also applies to anyone who exercises substantial control. All of those folks are listed on the beneficial owner information report as well. So that, I think, gets through all of the questions I currently see. Does anyone else have any other questions? I know this is a lot of information. This presentation will be available online through CBCA, Colorado Business Committee for the Arts. And as I said, anyone's welcome to reach out to me directly if you have follow-up questions that you don't feel like asking in this format. Happy to help on a more one-to-one basis. But I think I don't see any other questions popping up. So we may have finished this in a flat 42 minutes. I'm very happy with all of you being patient and with your great questions. I really appreciate you participating. I will take another opportunity, as Meredith said, to plug Colorado Attorneys for the Arts, which is a great organization we run here through CBCA that provides pro bono legal services to in-need artists and arts organizations. So if you are an artist or arts business that has a legal need and that financially qualifies, please reach out to Colorado Attorneys for the Arts. You can get some help, maybe help filing your beneficial owner information report. That is certainly on our list of tasks we can do.
Thank you, Dave. Well, everyone who's watching is muted or at home watching the recording, so I will take the time to say thank you out loud, Dave, for walking us through this process, defining those terms, answering questions. We are very grateful to you and the Creative Law Network for partnering with us on this webinar. I think with that, we can wish everyone a great rest of their day. Thank you again, Dave, and have a wonderful afternoon.
Thanks, everyone.
Bye.